Hello to those of you who are thinking about buying a home, refinancing, whichever the case may be. If you're going to be applying for a mortgage, I want to give you just a couple of short tips to help in ways to reduce your interest rate. So the interest rate that you're offered by a lender is going to be primarily determined by your credit score and your down payment if you're purchasing a house. And if you're refinancing a house, it's going to be your credit score and how much equity you have in the house. And the third wild card to this would be the type of mortgage you need. So for example, if you need an FHA loan, a conventional loan, or a reduced documentation loan where you're not providing your tax returns and those kinds of things, that's going to obviously adjust your interest rate in a different direction if that's the type of mortgage you're going for. But you can see a significant difference in the rate that you're offered based upon your credit score. So if you have a credit score of say 750 and someone else has got a credit score of 550, you're going to see a huge difference in the interest rate between those two offers from a lender, from the same lender. With everything else, all the other conditions being the same, the credit score is going to make a huge difference. So if you're even thinking about purchasing a home or refinancing at any time in the future, you really need to pay close attention to your credit score, because if you wait and you make late payments and you miss payments and whatever it is that would be negatively impacting your credit scores, if you're doing all of that and now you need to apply for a mortgage this week, it's going to be really tough. You can make some moderate gains and improvements in your credit score, but it may be difficult to get it to the optimal place to provide you with the best possible interest rate. Okay, so the second thing I talked about was the down payment. The larger the down payment, the better the interest rate's going to be. It reduces risk for the lender. Should you foreclose on the property, they have enough equity there where they can sell the house and get their money back out. So the larger the down payment, the better the rate. I know a lot of people want to put very little down, and then they're rate shopping and they're looking online, they're looking at rates that are listed online. A lot of that you have to understand what those rates are based from. How much of a down payment, what credit scores. They're probably listing optimal situations with those rates that you might see published. You have these popular websites that list what the rates are today. You don't really know where they're getting those rates from, but you get the best opportunity to get the lowest rate possible with having a larger down payment. Now, if the larger down payment, say 20-30%, is not in the cards for you, what you can do, like I said, is improve your credit score. That's the best way to do that. So those would be my two pieces of advice to improve your credit score. The final one that you can do is to help with your rate is talk to the person who you're working with, and if you're not working with anyone, we would love to help you. You can contact us based on the information I provide in the description of the video and also in the first pinned comment. But you could ask about buying the rate down. So what buying the rate down means is that in all transparency, the lender earns commission based upon the rate that you're being offered. Let's say the going rate today is 6%, right? And they're going to make their normal commission at 6%. And if you want them to give you a lower rate, you're going to really buying the rate down means you're making up the difference in the commission loss that they're going to make, that they're going to lose. Okay, so that's a little peek under the tent for you. So you might be able to buy the rate down a few $1,000s or whatever it is. You'll be told what it would cost to get the rate down 1 point lower, and then you make the decision. Is it worth it for you? The longer you hold on to the home or that loan, the more sense it makes. There's usually a payback period of a couple of years, or where you would have made the money back and the interest saved by having a lower rate in exchange for the payment you need to make to buy it down. And if you're buying a house, you can negotiate with the seller, this is a good point, to cover that for you. So maybe you're agreeing to their last offer offer, or their last offer, they made a counter offer to your offer, and you might agree to it if they cover the cost to buy the rate down, the points. So hopefully that helps you. Definitely give us a call. We appreciate you. Thanks for watching, everyone, today. If this was helpful, hit that like button. Thanks again. Have a great day.